Hello, everyone. Good evening. How are you guys doing? Okay, not so good. I understand. War scenario is very, very tricky right now. And every time market is trying to recover, the recovery is not getting extended. There is enough negativity in the market right now. And remember, when there is negativity, there is opportunity. And when there is a lot of positivity, there is a possible crisis. So it's a greed and fear which works in market. And negativity is actually a perfect recipe of lots of fear, which could lead to an opportunity. Opportunity will come today, tomorrow, or day after tomorrow. We don't know. And practically speaking, we cannot predict. All of us who are sharing some knowledge either on YouTube or on TV, etc., all of us are trying to do some kind of a best case guesstimate about what can happen in the market. You remember last time I created a video and I shared in my channel where I talked about historically, if you look at last 8 wars, what has happened to the market? A precursor to the war has always been negative for the market. During the war, market tend to recover. Okay, while the war is on, market tend to recover during the war, and after the war, obviously there is a very strong recovery in the market. So war typically is supposed to be very disruptive, right? Destructive, and there is lot of rebuilding of countries which happens after the war, which leads to demand of commodities, which leads to demand of economic activity. That's, I mean, very common sensual way of analyzing the war. But how this war is impacting our country, India, and whether we will come out of it very strong is something which we need to understand. Now, the core issue of war, which is disturbing us, is the access of oil and gas because of the restrictions on the Gulf by the Iranian government. Now, that is a serious issue because if we don't get a steady supply of energy, all our economic activity, which is dependent on energy, right? Any economic activity cannot just happen if energy is not available. All our economic activity, including our household activity, will see disruption, leading to higher prices, leading to inflation, which will kind of stop the aggressive economic growth which we would probably like to have. If you look at the financial result of Indian corporate last quarter, it was very good. There was a moonshot of recovery which was getting experienced, especially in the smaller and the mid-sized company, right? But that will probably face some resistance now, and maybe this quarter, maybe washout quarter. It may not continue to be as growing as it was in last quarter. Does that mean that Indian market will crash further? Does that mean that market will continue to go down? Well, the answer to this question is absolutely not, because ultimately, even if the results are bad or market is in a negative tone, there is fair bit of negativity which has already gone inside the market. Now, a small hint of positivity will lead to long recovery in the market. And that is what happened. If you look at the data, and I'm going to share the screen with you and share with you. If you look at the Nifty chart, and I shared on Twitter also that there is a Lakshman Rekha which has been approached. And that day, market actually recovered when I posted on Twitter. So let me share with you the chart. Sorry about this. All right, I hope you guys are able to see the chart. Okay, so as I mentioned that I mentioned in Twitter that market there will be a Lakshman Rekha in the market. Now, you look at the market, this level which is around 22,000. Market has market. This is what period? This is 2024. Okay, when market went up, consolidated here, gave a good movement, corrected, stopped here, consolidated, gave a movement, corrected, again stopped here. So this level, 22,000, is a very, very critical level. And I have a very strong view that if market and market will only recover if dollar index goes down, okay, and dollar index is 100, and dollar index will only go down when there will be belief in the market that inflation will not go up. Okay. And for inflation to not to go up, there is a need of crude oil to cool down. And crude oil will only cool down when there is acceptance of war. Not necessarily that the war will get concluded, but the moment there is acceptance of war and there is a steady flow of oil bunkers in that area, then I think crude oil will tend to cool down. Okay, let us see the some data points, some analysis, and try to make a view of this. So let's go to crude oil. Okay, where is crude oil? Yeah, here it is. So this is crude oil. Now, it's WTI crude oil. Let's take that example. It's right now strong because there is a fair bit of uncertainty, and crude oil is going up, which lead to inflation going up, which leads to dollar index going up, which leads to global markets going down. And that's why Nifty is also going down. But if you look at Friday's data, there was a fair bit of recovery. Why did that happen? Because of that critical level of 22,000, right? Is market buy on fall right now? No, market is still sell on rise. So I'm not saying that you become a net buyer in the market at this moment. Okay, it's a sell on rise market, and we will always find opportunities to exit the market when there is a fair bit of uncertainty which is attached right now. And all the four indices are also showing negativity, okay, which is again a very strong point of view that market is negative. This is as far as momentum is concerned, okay. Fundamentally, market can have a different view because when market falls, suddenly the valuation becomes very comfortable. The margin of safety of owning the companies goes up, and people who are fundamental driven, well, they will obviously tend to buy stock at lower level because they'll find relevance of buying stocks at the lower levels, right? So from an active investor perspective, it is still a sell on rise market till dollar index starts going down, till crude oil starts relaxing a bit. So it's a very bad market condition. Okay. Now, what do you do in this situation? I strongly feel that commodities trading has done wonderful in last year. And I think you should still see commodities trading for your learning purpose because commodities volatility is far more, at least the short term volatility is far more moderated, and there is a clear trend in commodities. In equity, gap up, gap down risk is always there. So you may face the heat of whether you'll make money or not. But in commodities, especially futures and options, if you're an active market participant, I think it makes sense for you to look at commodities. For other people, I have just one suggestion. In my 20 years of market experience, I have seen these situations. And the best way to utilize is to learn at this moment. Only learn. Do nothing. Okay. Don't trade. Why are we in a hurry to trade? Right? Is our money not handsome or not comfortable in our bank account? It should be, right? Focus on learning. Your learning will give you preparation for future, which you can use for earning. My suggestion is, learning, you can be self-driven learner. So you can go to my YouTube channel and go through Learn to Trade series where I've taught everything. Or actually, what you can do is you can enroll for this program, Stock Trading 101. It's a 30-day program, live program for 30 minutes, right? It's a brilliant program from 8 p.m. to 8:30 p.m. just for half an hour. You need to be there in front of your screen and someone will teach you the topic of trading, okay? You will understand technical analysis quite well after you go through this program, and then you can start practicing the way you should be done. Okay. So focus on learning. It's a great opportunity. If you can do self-learning, Learn to Trade is there absolutely free of cost. But if you need a guided learning, then I think Stock Trading 101 is a great program for all my learners who are serious about learning journey. All right. Take care, guys. Don't be in a stress. Whoever is in a stress in market recognize the stress, and market will take more money from you. The most important part of market is position sizing, and you need to understand if market is bad, you cannot deploy more capital. Trade with less capital, wait for the right opportunities, and market will bless you with the right opportunities. All right. Take care, guys. Jai Hind.